So next up, we've got Christian Milau. He's the CEO of Equinox Gold. I'm sure you're all familiar, but Equinox has probably been the most active mid-tier in the space in recent years, several acquisition and divestitures. They do have, in our view, probably the most robust organic growth profile in the space. They're doing about 700,000 ounces this year, and they're going up to over 1 million ounces in the next few years. So I'll pass it on to you, Christian, for an update and looking forward to hearing what's going on with you guys.
Great. Thanks, Arun. Good to be back and pleased to see everyone again. I'll walk you through kind of a recent update on Equinox. As Arun said, it's been a busy few years, and we created the company about 4 years ago, and from a standing start of kind of no production, now hitting about 700,000 ounces in this coming year, 2022. There will be some forward-looking statements, so I'll just note the cautionary statements here that you should have a read of. But when you look at the overall portfolio, just to summarize, we came from 2018 when we acquired Mesquite. We've done a couple of decent-sized acquisitions since then to build out the asset base and the diversification amongst the other countries we're located in, which is Canada, the US, Mexico, and Brazil. Now have a large reserve resource base, 16 million ounce reserve, 7 producing mines, and as Arun said, one of the biggest growth projects portfolios in the sector right now, and that's really our focus. We've been focused on M&A. I think while gold prices were a bit weaker, we were able to pull together some assets, and right now it's really about executing on our portfolio. The average of our guidance, which we just put out yesterday, is about 670,000 ounces. Just reaches over 700,000 at the upper end. We've got a strong balance sheet, over $500 million in liquidity at the moment, and a very big investment portfolio of almost $500 million as well. And that sets us up well for building out the portfolio and focusing on our current assets to get to 1 million ounces a year through funded growth internally. And in terms of last year and kind of the report card and things we said we'd do, it was a tough year in terms of the share price performance. We did have a hiccup there in Mexico with the blockade at Los Filos, but in terms of actually on the ground and operations, we hit about 602,000 ounces of annual production last year. That was within our original guidance range, despite the blockade and the issue we did have at Los Filos. So we're pretty proud that we were able to actually make up some of those ounces from the other sites, and also Los Filos was able to have its first full quarter at the end of last year and had a good quarter. We should be coming in within that guidance range as well for all-in sustaining costs. We're able to integrate the Premier Gold acquisition, which brings in a world-class asset in Greenstone in Ontario. Our health and safety record and environmental record was very good. We were able to reduce our statistics for the year, and really pleased with that in terms of a growing business, able to continue to improve on our metrics. And development's been a big focus. Santa Luz construction in Brazil, it's a mine that's almost done. I'll talk about that in a minute. Greenstone, we started construction. The expansion projects at Los Filos have been ongoing. They've been a bit slow, obviously, because of the blockade that we did have last year. So we continue on with opening up new deposits there. Castle Mountain expansion, we got out a PFS study, which indicated a 200,000 ounce producer for almost 20 years and a 4 million ounce reserve. So a really good scale project. And the Aurizona expansion, we put out a PFS study on that, which indicates almost a doubling of the mine life once we start going underground there in the next few years. And exploration continues to show success. Both reserves and resources are showing some returns at a number of our mines that are shorter lives. And we're able to sell 2 non-core assets. We sold Pilar earlier in the year, and we announced the sale of Mercedes late in the year. So continue to strengthen our balance sheet. Looking at guidance and just giving a quick summary, this is fresh from yesterday. This coming year, it'll be touching 700,000 ounces of production, and that growth in production from 600 to 700 really comes from extra ounces at Los Filos, assuming a full year of full production here at 160 to 80,000 ounces. A slight increase in a couple other mines, particularly RDM, going up to 70 to 80,000 ounces now that we're seeing a more run rate basis for that mine. And the new mine, obviously, Santa Luz coming into production, it should be pouring gold late in Q1. So about 3/4 worth of production this year, so 70 to 90,000 ounces. And cash costs and all-in costs have gone up a little bit. The particular impacts are consumables, fuel, probably up 10 to 15% across the board. We're seeing the inflation impact hit us as we're seeing it across the industry. We'll be going into a process of looking at joint purchasing globally on some of our key consumables to see if we can combat some of those increases, things like cyanide and other inputs. Maybe we can be buying them across the organization rather than individually at mine sites, and that should have some volume benefit for us. In terms of the CapEx front, 195 million of sustaining capital, a couple of large stripping programs. Mesquite will be pushing back at VE2, about $40 million of strip there. Aurizona has a stripping campaign of about $20 million. RDM is finishing off their stripping, and there's a bit of early stripping here at Santa Luz as it gets into production. And in terms of non-sustaining capital, obviously the biggest portion of that is the 326 million for Greenstone. We're in full construction now. This year's a big year. We'll be ramped up to well over 1,000 people on site. We've got 650 beds in the temporary camp that will be full in the summer. So that'll be a key activity point. Will be this summer as we ramp up. Right now we're just finishing off engineering in the sort of late first quarter, early second quarter, and you'll see a lot of activity on site this summer. And obviously just finishing off Santa Luz construction in Q1 this year, and that should be done, and that'll be tailing off obviously that capital spend in Q2. So that'll help improve the cash flows in the second half of the year. So we're very much second half weighted, with 60% of the production in the second half of the year and 85% of the cash flow. And as you can see, our all-in costs and our cash costs come down over the year. Looking at the mines individually, Mesquite had a good year last year, almost 140,000 ounces of production. We're transitioning during this year from finishing off the Brownie pit, moving into VE2, the big strip program. So we have ore coming from VE2 late this year and into next year. We'll continue to explore there and look to add ounces. It's a shorter mine life. It's already been going for almost double the period than when we bought it. So we'll continue to look to add a year or two here and there as we can. In terms of Castle Mountain, smaller mine, first phase was meant to be about 30,000 ounces a year. It'll do 25 to 35 this year. We are introducing crushing and agglomeration, which is how Viceroy used to operate in the early days when this mine was operational in the 1990s. The key thing here is we're planning to submit the phase 2 permit expansion amendment late Q1 this year, so in 2022. Expect about a 3-year timeline to get that permit amended, and then we'll be able to construct and move towards 200,000 ounces of production for a good sort of 18 to 20 year period. So exciting long-term potential there. Smaller mine currently in operation, obviously, for the next number of years. Los Filos, as I mentioned, it's had a challenging last year and a half. It did about 140,000 ounces last year, finished off strong. Did have an interruption mid-year. It basically has been opening up new ore sources in Guadalupe, which we're now mining from and stacking ore on the leach pad. We're also opening up the Bermejal underground. It's been a slow start because we've had these start-stops with the blockade last year, and basically hope to have some good ore coming out of there late this year. And then we'll be looking to build a CIL plant there, but we have indicated that we'll put that on hold until we have some more stability in the community, and likely until Greenstone is done in the first half of 2024. So there is a bit of a delay there with that project in terms of expanding the actual throughput. That will take us to 300,000 ounces plus per year when you get the CIL in place, and will bring down the cost significantly as you get a greater efficiency from the heap leaching and having the CIL plant on site to handle the higher grade material. Mercedes mine did about 40,000 ounces last year in total, and obviously we've announced the sale of that, so I won't touch on production there. In Brazil, the portfolio is rounding out nicely. Aurizona had just a fantastic start since it got into production again in 2019, generating close to $100 million of cash flow per year. We've extended the mine life, as I said, from about 6.5 years to 11 years with an underground deposit. We are continuing to drill there. We expect to see the resource and reserve continue to increase. We'll probably start moving into the underground late in 2022 or next year as we get a portal permitted and we can start actually doing some work there, as the pit is ready to move underground at some point over the next sort of 12, 18, 24 months. Fazenda continues on, smaller mine, 60,000 ounces, but it's just down the road from Santa Luz, so we see that as a nice big district of 160 to 80,000 ounces of annual production. RDM, we've actually been able to do a good job of expanding that one slightly. It was a 60,000 ounce producer. It was hooked up to the grid, so it has grid power now. It's had lots of water, so it has all the water it needs. And we're moving it towards 70 to 80,000 ounces of production this year, and we hope to expand it a little bit further, between 80 and 100,000 ounces a year annually. and that'll just benefit the cost base as we move forward. And it's still finishing off a stripping program, so the costs are a little bit elevated, but it's a nice little contributor into the portfolio, and we see that as a key part next year as we move forward. And I think importantly, I'll touch on the two major projects we have on the go right now. Santa Luz, it's $100 million of expansion capital. As you can see from the site there's a lot of infrastructure there. We're basically just modifying, amending the actual infrastructure. We've been mining since June. We're commissioning most of the plant area at the moment in terms of grinding, SAG mill, ball mill, secondary grinding, and the leach tanks are actually going to be filled with water any day now. So we should be ready to pour gold in the second half of March here, and we've indicated about 3/4 of production this year. So a nice 100,000 ounce producer at a good cost that'll be a good contributor to this company for many years to come. And Greenstone, that's the project we got from acquiring our stake in Premier Gold. This was the key asset. It's 5.5 million ounces. Orion owns 40%. We own 60% of it. It'll probably be the fourth largest mine in Canada in terms of production at over 400,000 ounces a year once it's in production in the first half of 2024. So we've got 2 years of construction. It's $1.23 billion of capital. We need to fund our 60% share of that. It's off to a good start here. We were able to update the capital in October and provide a number that included an enhanced contingency of 14% and also includes some inflation and escalation from all the increases in steel and other inputs that various groups have seen over the last year or so. So we think we're off to a good start. We should be ramping up the team there as we move into summer. Lots of activity on site, even though it is winter right now, and a great start to that project. So first gold pour aiming for the first half of 2024. And in terms of funding this, we've got a strong balance sheet. We continue to manage that over $300 million of cash at the end of last year, $200 million available in a revolving credit facility, a good supportive global banking group that, we may look to amend that credit facility and extend it, obviously, as the company's probably doubled in size since we put it in place a couple of years ago. And we have operating cash flow from our business, all-in sustaining margin at current gold prices is over $300 million. And we have an almost $500 million market value of our investment portfolio, which includes Solaris, I-80, Bear Creek Mining once that deal closes, and as well as Pilar Gold. So in terms of liquidity plus market value of investments, almost $1 billion in total. So a nice strong balance sheet at this point in time. And just bring it together, when you look at the three right-hand columns here, our production base, we're moving towards 1 million ounces of production. As Arun said, we have one of the highest growth rates in the sector with all the internal growth that we're developing at the moment, a large reserve base, so highly leveraged to the gold price, but we are trading at a discounted multiple, and I think we're still suffering from a bit of the overhang and the hiccups that we had, obviously, at Los Filos last year. Plus, we've got a big development pipeline at the moment, and we just need to show execution on that, delivering projects on time, on budget. We've built almost a mine per year over the last few years. Santa Luz is almost done, which will de-risk that. And then Greenstone, obviously, as we move forward on that and continue to de-risk it, we see ourselves as climbing up that multiple curve towards a sort of average of our peers that are getting closer to that 1x multiple instead of 0.6x. And just in summary, what we set out to do 4 years ago was build, a 1 million ounce plus producer, something of scale that's liquid, that's diverse, that's investable. And we think we've got the bones of that now in the business. We just have to execute on developing the portfolio. So we've got almost 1/4 of our value sitting in Canada with the Greenstone mine. Obviously, lots of expansion in terms of production there as we get that into full production in 2024. The US will be growing the business there as we move Castle into production after Greenstone. Mexico, we've got, the Los Filos deposit, which will be a 300,000 ounce producer once you put the CIL into place, which again will be after Greenstone. And then in Brazil, once we get Santa Luz done, that'll be a nice 300,000 to 400,000 ounces of annual production. So nicely balanced. The stock is trading at a low multiple and a very interesting stage when the gold cycle seems to be firming up a little bit here. It's obviously been a bit lackluster over the last year, but we think we've got a huge amount of leverage to the gold price and diversified portfolio that's at an exciting point in our growth and development cycle. And as we get the portfolio built out and hit that 1 million ounces and Greenstone's in production, obviously we'll be looking at returning some capital to shareholders, likely through some kind of dividend policy once we get to that steady state in 2024 plus. So I'll just pause there and maybe open it up to questions, Arun.
Great. Thanks a lot, Christian, for the update. I guess like we talked about, you've been very active on M&A. Are you finally happy with the portfolio? Are you still looking for more, either acquiring or divesting anything you have?
Yeah, I think, at this stage we are much more internally focused and really want to just build out the assets and make sure our attention's on that. And it's a critical part of our growth and our future, and I think value creation. And I think we have enough assets right now. I'm not saying we wouldn't necessarily continue to swap a smaller scale asset, sort of like what we're doing with Mercedes, and then bringing in an asset like Greenstone, where you're sort of increasing sort of the longevity of our assets, like lowering the cost base, diversifying the portfolio. But I think at the moment it's really about focusing on the internal development, and really we've kind of sold the smaller assets, and we think we've done enough deals to bring in the right number of assets. So, opportunistically, if there's something there, of course we'll look at it, or if there's some kind of offer for maybe one of our smallest assets as Greenstone comes into production, of course we'd look at it. But right now I think we're at about the right size.
Okay. And then just in terms of the growth, it's not talked about too much just because the permitting is a little bit far away, but maybe an update on the permitting status at phase two for Castle. Have you found enough water there? And then just lastly, you mentioned you look at that, assuming a positive permit post Greenstone. Would you say phase two is a priority, or would the Los Filos expansion be a priority at that point in 2024?
Yeah, so taking that multi-part question, I guess really what we've been focused on is accessing more water at Castle, and we've just finished off the tests on that and some of the pump tests, and it looks like there's 3 to 4 good sources of water, most of them on our property, one of them actually off the property where we can pipe that water in. And we think we can tick that box and say we've got enough water for phase two. So really the focus is shifting on submitting that permit amendment application, and that should be done by around the end of Q1 this year. So literally within the next couple of months here, and the team will be ready to build it in about 3 years' time. Maybe it takes 2 years to get that permit amendment, but I think we're planning for 3. So it'll be a nice little period right after Greenstone's done, and I think we'll slot that in after Greenstone, based on getting the permit in that timeline. And Mexico, I think we just sort of will slot in as and when we see it fit to do that, likely after Greenstone's done or towards the end of it. I guess there is a chance that you could overlap a bit with the Castle Mountain phase two, but at that point in time, I think we'll have a good cash flowing business with the Greenstone contribution, and you might have a bit of overlap between those two. But I think Castle is going to slot in a more regimented sequence profile after we get Greenstone done, and I think the CIL in Mexico will come in, as and when we're ready there.
Great. And just lastly, quickly, only got a few seconds left, but you mentioned in yesterday's release that you've seen the 15% cost inflation on fuel, consumables, whatnot. A few years ago, you were getting significant benefits from the Brazilian real weakening. Is the FX helping in kind of some of the other countries, or the cost inflation is honestly just so high that it's a moot point?
No, it is helping. You're actually right. I probably do gloss over that a little bit too much. We did make assumptions about 5 to 1 Brazilian real, and currently we're trading at, I think, 5.4 or 5.5. So you do have sort of a 10% benefit there, and we do see that offset to a certain degree. So maybe that 15% does get reduced a little bit through the currency being a little bit weaker, and we see the similar situation in Mexico and Canada. So but we don't want to overplay that at the moment. I think we're playing a bit of catch up on the cost base, because obviously when COVID hit, you had costs going down, the currencies were weak, and we had the double benefit at that point in time. Now I think we're having kind of a more normal situation where a little bit of cost creep, maybe it's a little bit high at the moment, and a bit of currency offset, which is a natural hedge against it. So you're right. I think we will see some benefit from this year.
That's great. Well, that's pretty much takes us to time. So thanks a lot for the update. Looking forward to the year with kind of the deck being cleared to kind of just deliver and get that leverage to gold. And I think we're all bullish in the industry. So you guys are one of the guys to look at, I think, for the year. So thanks a lot, Christian. Looking forward to connecting in the near term.
Great. Thanks, Arun.